Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello friends, looking at the Volatility Index, we'll look at VIX, TVIX, UVXY, SVXY, XIV, daily and weekly time frames, action-packed day today. We've got the VIX finally breaking to the upside. Certainly takes its time, but when it explodes, it certainly does very strong. And let's actually zoom out and get more of a view here than just 3 months. But we closed above all moving average resistance. Big time breakout, bullish MACD cross. It actually never crossed bearish, so fending that off. The RSI is back above 70, and let's zoom back even more because the RSI doesn't get above 70 for too long, and you can see over the past almost year here, all of 2016, we briefly got over 70, so we're briefly over it now. Doesn't mean we can't have another green day here, but we just want to be aware things are getting a little overbought. Keep an eye on this overall downtrend because we are definitely setting lower highs and lower lows. And these names are meant for short-term trading. There's time decay. Anybody long in these names, they're long because they're stuck in a position and they might not be aware of the time decay. Either way, they're just losing more and more every week that goes by. So stop losses are essential, number one, because essentially we're trading against the trend. These volatility indicators, especially the leveraged ETFs here, TVIX and UVXY, they are designed to go to zero. There is time decay. They will reverse split into infinity to stay afloat. But you do not want to be trading these names. I would say 3 weeks at the absolute most is what you want to be in here, and 1 to 2 usually. So let's look at VIX on the weekly time frame. You can see the spikes. They last about 2 weeks. 2 big bullish weeks. We had 3 bullish weeks there, 3 there. So 2 or 3 weeks is the maximum you want to be into this trade, because then the profit taking steps in. And look at how much downside there is for those brief flares to the upside. We have months and months of downside, waiting. Finally, the bulls wake up. But that's not the kind of trade that you want to be in and waiting. You want to get in once the bulls do wake up. So all the weekly time frames back as support, and the lower pattern, the lower high pattern, let's draw it real quick. It doesn't really have too severe of a slope because the lower high pattern is not very significant, but it's right there and it's hitting everything. So that's where you're going to be looking if we see continuation this week and further downside. And the close of the high of the day doesn't indicate Let's try that again. The close at the high of the day does indicate continuation heading into next week. And we will be looking at that resistance level in conjunction with that upper Bollinger Band resistance. So let's now look at TVIX and UVXY. These are the 2 times VIX short-term ETN. I call them ETFs, but it's very clear the overall trend. Now, big volume shows up. The bulls are on fire, taking back a couple weeks of losses. But anybody who's been in this trade for more than a month or two, this move isn't doing anything to the losses that they've suffered. So it is a very bullish break. The upper Bollinger Band resistance will be a level we look at. The 50-day resistance is just under $30, $29.58. And the next lower high that I'm looking at is up here at 30.75. So bulls have a lot of momentum. Weekly time frame, 10-week resistance we'll be watching. That's going to be in the mid $27 range. We can see we haven't convincingly gotten over that level in almost all of 2016. So again, 3-week move to the upside, 1 green, 2. So you can see here, if you're planning on being in this trade anything more than 2 weeks, 3 at the absolute most, that's not a good idea because of price history. We can see that never really works out for the bulls. UVXY, same story here. Very similar chart. Bullish break, upper Bollinger Band, 50-day resistance, 26.59. Lower high, same day, 27.80. Weekly time frame, 10-week moving average. We'll need to watch that one as well. So very similar there. And we're looking for short-term bullish action to continue. Now, other names, UVX or SVXY, which is the bull that's been performing very well, and XIV. These are your bread and butter steady income plays. And look at the trends where they are consistently going up. So SVXY has been an extremely bullish uptrend for over 2 months. we had a breakout, and very rarely will you see going from a breakout to an absolute dump. So that certainly stands out. But the 50-day support here is 66, make that 65.83. Big bearish volume, close at the low of the day, giving back all kinds of gains from the previous month. But the overall uptrend, very, very clearly intact. We could pull all the way down here to $50, $45, still be maintaining the higher low pattern. So you can see the sky was falling back in May and June. 3-week dump where we gave back a move from $60, $65. We dropped all the way down to $45, giving back 25% in 3 weeks. Anybody who bought that dip had quite the bull run. This is normal, healthy consolidation. You can't make a move up for 2.5 months and not consolidate. It's just the nature of the stock market is stair step up, elevator down. You've heard that before. And that's because a lot more people use stop losses. And once those get triggered, the algos go off and it just knocks it all the way to the downside. And that's when the fear steps in. And that's when these names, TVIX and UVXY, explode to the upside. But it's not like there's a ton of orders out there where if the price hits a certain point, people buy in. And that's pretty much what the opposite of a stop loss would be. And those trades do exist. People do use them, but not nearly as many people and retail traders that use stop losses. So that's why a downside is so much more significant than upside and quick. So the upside is slow month after month after month, very nice gains. Give a bunch back and very quickly in a couple weeks, and then steady continue to the upside. So XIV, same thing, 50-day support, 33.67, and coming from a breakout to a very big pullback. I don't want to say breakdown because we're not breaking key levels yet. 10-week support here is 34.15. And we did close below that. So comparing to SVXY, we also did close below that 10-week as well. So plenty of weekly support in the low 60s for SVXY and in the low 30s for XIV. And again, XIV all the way down to 24 would still be maintaining the higher lows. And we can see the reaction, what happens every time we have a big time pullback. We usually see a recovery. So that's what we're looking at heading into next week. We are looking for these volatility index names to see some further upside, and it's the close that has us pretty confident that that's going to occur. We are overbought on a lot of time frames with reference to the RSI on the hourly charts, so we might need to cool off a little bit, but the trend definitely next week has a lot of people looking for these names to continue bullish and for the markets to continue bearish. So we'll certainly check back in. I appreciate you watching, and I hope you have a great weekend.